morning, beautiful people. You guys ready to go? Hey, Mom, turn down that music. What does she do? What's she doing over there? I just think of Will Smith wearing a silk bathrobe, carrying nunchucks. Hey, Mom, meatloaf. Anyways, good morning. ¿Cómo allez-vous? How are you? I am fine, thank you. My name is Wayne McDonald. I'm a currency trader. Been doing this almost 20 years. Before that, I was a venture capitalist. Before that, I was a high-tech entrepreneur, some of which was raising millions of dollars for other startups. Cool. So, and before that, I worked in the nonprofit world along with the likes of George Soros. And then before that, I worked at NASA. Before that, I had a paper route. So anyways, that's me. Nice to meet you. Welcome to Forex.Today, the YouTube community of more than 19,000 foreign exchange traders. I think a common thread amongst us all, even though we come from different cultures, different times. You know what's interesting? We probably all have some sort of thread of entrepreneurialism that you know goes through our soul. Oh, what did I say? Will Smith? Sorry. That would be funny. Yeah, that would be funny though, right? So anyways, yeah, I think we're all entrepreneurs. So this is great. So the interesting thing is the big people that are controlling our market, they're probably not entrepreneurial at all. They're very mathematical, methodical, very corporate. And so there's a bit of a dichotomy there. They're not risk takers like you might see in the movies, about Wall Street, about how professional investors are all a bunch of cowboys and yahoos. That's probably pretty far from the truth, or what common Wall Street investing is. It's all about risk management, control, and thought process and strategy. Okay, and the rise of quants, for example. Okay. So anyways, so we got to temper our enthusiasm. If we're entrepreneurs, that means we accept and embrace risk, which we know is actually not something we should be doing in Forex, instead of recognizing the risk and managing it. So that's cool. So I'm glad that you're here. You're a lot like me. Okay. But it's always a challenge to manage our enthusiasm. So anyway, so we'll conduct technical analysis today, fundamental analysis, trader psychology, really ultimately whatever you want or need to succeed. I look at myself over this hour and a half or so that we typically go. I look at myself as a servant, a humble servant. So I am here to serve, and I appreciate you in my life. So let's do something wonderful with our time. I'd also like to invite you to visit tradersway.com, open up a demo account with Traders Way, download, I'm still using MT4. I use a variable account. I'm very old school. My trading strategies haven't changed in 20 years. My tactics haven't changed. Even the type of trading, 10 years ago, I moved over to MT4. I haven't had a need to change. Right? I've always used a variable spread account. Ultimately, I like the soft dollar over the hard dollar, but it doesn't really matter. So really, whatever you want is available at Traders Way. MT4, MT5, C Trader, variable account, fixed spread account, ECN account, whatever, man. Pick what you want, pick what you like. But the thing is, ultimately, you're going to need an execution partner for your successful Forex trading business. And a lot of that is going to be trust. The important part of picking that business partner, that service provider, is ultimately trust. And just just look at this. Just like, look, let me move over here to a different screen. Open up this little window here on your current broker. Look at Market Watch. Look at something like, I don't know, just grab like Eurozar, open up specification, and look at how much they pay you and what you get charged going the other way. Now, this isn't Trader's Way. This is the interbanking system. So if you're long Eurozar, well, you're borrowing money at 6% times your leverage, right? Versus if you're short, you're borrowing cheap money and investing and collecting the 6%. But the interesting thing here is if you're short, you're earning income. You're earning the interest from your investment into South Africa. You're borrowing euro for basically free. You're actually getting paid to borrow euro. And then you invest it in the South Africa. And this is just income you're collecting on top of your asset appreciation. Now, with your dog with flea broker right now, and I told you like 2 weeks ago, I was working with somebody and I'm like, I want to look at your account. So I opened up their account and it was with a big broker out of London. So I'm like, cool. And I started looking at these things. You know what it showed? You see how Trader's Way pays you a huge income if you're short Eurozar? That big broker out of London charged you money both ways. So if you were short, they would collect all that income that was due to you, and then they charged you money to do it. A double dip. They took your income and then charged you on top. And I'm like, this broker sucks. And it's a big, well-known one. And they're taking all the income you're earning through the foreign exchange market and they're pocketing themselves and then charging you money for the right to take your income. I'm like, oh my God. And then it just reminded me, thank you, Trader's Way. Just right. Stuff like that. I'm just like, wait, that's not right. What that other broker's doing. I'm like, that's not right, man. That's just not right. And then you look at Trader's Way and I'm like, thank you. Just appreciate that. That's good business. They're passing on the income to you. The income you deserve through your trading through the foreign exchange market. And you're like, oh my God. So they actually enter your trades. They don't trade against you. And then you actually collect your income. I'm like, dude, that's the way you do it, bro. That's the way it should be done. So that kind of stuff, I'm like, just check it out. See if they earn your loyalty and respect. It's important. Okay. Anyways, cool. All right. Cool. How you doing? I'm going to start with Kiwi dollar. What is the basic assumption of Kiwi dollar without looking at the charts, without looking at the news, without discussing what the central bank has said? What is one basic assumption based on nothing but seasonality for specifically Kiwi dollar? If you're in my swing trading group or my day trading group, you probably know the answer. And I'm not saying the answer is right, but it impacts the thought process of how you would want to treat this currency. Johnny says November should be up 2%. Yeah. That by the end of November, over several years of data and research, it's not that it should, but it has, is the true number, right, Johnny? On average, over the last, 8 years or whatever it was, over that period of time of several years, the Kiwi dollar has appreciated 2% from its open. Okay? Which is interesting. So you would look at this. Let me get my drawing tool. Let me get my EpiPen. Okay. La, la, la. La, la, la. All right. So you get your, so you would say, here's the open. Okay. So the next thing you want to look at is the low and a high. And then, of course, close. Okay. So pivot points, but you don't have to think of it that way, but you can think of it that way. Okay. So what it said is over the past several years, this pair on average closes 2% higher than the open. Okay, but we know even uptrends have a shape like this, right? Let's say an open high because it's an uptrend, retracement, and then that creates a new low and then a new high. And so what we have here is an open. Now, does this open make sense to you? Is that a reasonable, when you're using, let's say, like monthly pivot points, which now we're talking about November, is that does that where we started the first day or two of of November, is that like a reasonable price? Would you say, oh yeah, well that makes sense? And the answer is yeah. It's a monthly M3. That's about right. That's about right. It closed high in an uptrend. That's very, very bullish. Doesn't mean up from there. So what do we know? What do we know from that if we were looking at this statistically and we were still bulls on the long run because we're like, oh, you've analyzed the fundamentals of the dollar, they analyzed the fundamentals of the Kiwi, and then you look at the seasonality and you're like, okay, typically this is up 2%. What are the two prices in which a bull would buy in a scenario like this? Central pivot, M2. Okay? So, you could say, well, this is hardcore down. Oh, I agree with you. Hundo P. But in the back of my mind, in the entrepreneurial soul of my spirit, I think, well, there's going to be an open, a low, a high, and a close. This could be the low. I'm not saying it will be. It's an if-then statement. So if, right, because 3 weeks ago, I would have said, yeah, well, down there at 70, it's a buy. Cool. Now we're at 70 and it hasn't fallen further. It might hold. It might not, but it might. And that's a particular price. This isn't a random price. I'm not saying because it's psychological. I like the fact that it's a round number, 70. But there's more to it than that. So if I see a reversal pattern, then I trade. And my expectation based on technical analysis, which is a combination of statistical analysis and pattern recognition, we're going to say the pattern that possibly could be filled by buying it at 70 would be monthly M4. So we go, oh, there it is. So what might be in play, generally speaking, is this. Now, of course, we know it's not going to go straight up like that, but we're like 70 to 70, let's just say 74. And that there's going to be a path to get up there because we know it's not straight. And we know bears are not going to give up easy. So it'll go up, it'll come down, it'll go up, it'll come down. It'll go up, come down. And we call that, I don't know, Elliott waves. We call that Fibonacci retracements. We call them price action. All different names for the same thing. It's a pachyderm. No, it's not. It's an elephant. Yeah. It's a bovine. No, are you stupid? It's a cow. Okay. So right now, though, there's serious risk here. And, ideally, you have an opportunity to manage it before you get there. Okay. So that's interesting. That's all. It's food for thought. I'm not telling you to buy it, but if it were to go up, this totally makes sense. If it goes up now from 70, it totally makes sense. Let's look at it now from a different point of view, probably a different market participant, not long-term trades, right? But let's look at it from those that sold here. What was their target? Here. The green zone is an exit. Don't confuse that with up. It doesn't mean up. It means out. So they might get out here. They might. They might not. I don't know. I don't know them. Okay. And I forget, how do you eat an elephant? Dude, big bites. How do you eat an elephant? Chewing frequently? Yeah. Okay. How do you eat an elephant? After the tiger is done. Like, sorry, it would be a lion, right? After the lion is done. There's so many. It's just so funny. Yeah. Dude, like, Raymond, I'm sure there's people on YouTube that would just like faint if you mentioned that you killing and eating an elephant. They would just faint. Okay. No, we haven't done ZAR yet. Okay. Aussie and Euro, please. I'm holding a buy. I need your advice. Oh, well, you need my advice. Put in a credit card. I'll sing, man. I'll sing like a canary. Anyways, so it's an if-then statement. These are not random numbers. Nor does it mean up, but it does mean potentially a bottom. And that's what I'm really interested in, because technically, if I was going to try to combine technical analysis with seasonality, if Kiwi dollar goes up 2% in November, that's because I would assume October was a bullish month. Okay? Does that make sense? Like, October is usually an up month. So I'm like, okay, so it's a continuation of October, right? So you'd get something like up, 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 down, down, buy, up, 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 up. And I'm like, that makes sense to me. That seems reasonable to me. I don't know if that's going to happen. But everything here is like this. Bears are out. Bulls should be getting in soon, right? Bouncing on a psych level and going higher from 72 to 74. Okay. I'm still a believer in that. Okay. Okay. That's all. Then I look at technical analysis. It's going to be challenging between 70 and 71. It's going to be really challenging. Well, we have to do our work. Right? All right. Just looking at it, what do you think? What do you see? Okay, the dark gray zones that I'm highlighting on the bottom here, those are the bottoms. The projected lowest low you could possibly have. That's my first thought. Okay? My second thought is, what is the support prices? Okay, so we know Kiwi is at a beautiful number. Okay? By the way, about a week and a half ago, I analyzed like 7 different central banks, and I picked Kiwi to be the best trade. And it's the only one really set up at a good buy price. Let's clear some of this out here. Get rid of this. Yeah, let me just clear it up. Template, daily. Okay. What do we know about this? It's an S1. This is very similar to the Kiwi, right? We got a monthly pivot. We got the weekly out. And so maybe there's some hope for dollar, right? This is S1. This is M2. Kiwi is on M2. You see it's less down. Okay. Okay. Vodka, if you need help, email ryan@fxbootcamp.com. Okay. You see the difference? This is more oversold. So it's not the same. It's similar, but not the same. Okay. So once again, I'll have to pay attention, but I'm less interested in the moment. I'm waiting for a big surprise from Xi in the next coming days, next couple of weeks. Okay. But I'm more interested in Kiwi dollar based on technical analysis. Now, let's compare and contrast now to euro. What do we know about this? Let me clear this up. Just clean it up. Okay. What do we know about this? Well, Kiwi dollar is here. Aussie dollar is here. And euro dollar is here. So euro is even more so oversold, which means Kiwi is stronger than Aussie and Aussie is stronger than euro. You get that? Because the congruency here is everything is versus dollar. So Kiwi stronger than Aussie, Aussie stronger than euro, and that would be sort of your hit list. Okay. Okay, Crypto says, why don't I trade Nazi or the Dow? Well, first of all, I'm not. If I traded anything, it'd be the S&P 500. But I do trade stock. I do. Okay, but I don't trade that out of my trading account. I trade that out of my retirement account. Okay, and in the last 6 months, I'm up something like 28%, something like that, 25%, 28, somewhere in there. I don't check every day. Okay. I must have killed Bitcoins at the all-time highs yesterday. I got out of Bitcoin at 67, I think 250. That's where I got out. If not that, like very close. So anyways. All right, so anyways, so now we're basically doing relative strength, right? And you'll see that pound is about the same. So I'm not really ready to buy. Not really ready to buy. I'm not really looking at it. The thing is, this is important to a lot of people, but I tend not to trade it aggressively because it doesn't mean buy, go long. It means bears exit and stop selling. Now, it might look like up, up, up from here, but that's just out, out, out. Fareed says, hey, at what point would the crypto market be considered mature? So when I went to MIT, I did the cryptocurrency course, right? Okay. And my professor was Gary Gensler, who used to run the National Futures Association, which regulates Forex. How cool is that? So he was my professor. He taught me about the cryptocurrency market. And soon as the class was over, he was hired by the SEC and he started to regulate Bitcoin, allowing the ETF, right? So as Gary does his thing, it will allow more and more institutional investing. So Fareed, when institutional investors are allowed to participate, then that becomes a mature market. Okay? When it's not just speculative, but instead considered, investment grade. Cool. Then yeah, that'll be interesting. Okay? And since 90% of Bitcoin's already been mined, that will be very interesting if big multi-billion dollar institutional investors, hundreds of them, enter the market. You're like, ooh, now I can see why in that scenario we go to 100,000, because we'll very quickly run out of Bitcoin and big players will want exposure to it. So yeah, that'll be interesting, and it seems like it's not far away. Okay. All right. So what do you guys want to do next? Yen pairs or commodities and crypto? What do you guys want next? Thank you, Quack. Well, this is something like, I've been streaming on YouTube every day since YouTube was a tiny little startup. Google didn't own it yet. It's just a tiny little startup. Nobody was here. Just sort of a new little interesting thing to do. All right, Johnny says yen. Okay, let's go through that. Yen, gold. Yen, gold. Yen. Okay, so we'll do yens first, and then we'll do commodities. Aussie. What do we know? Okay. It was bullish. It has retraced. It retraced at a very, very, very specific pivot. That's the right one. I look at that and I'm like, I get it. I understand it. I know what's happening. I'm not scratching my head. I'm like, I get that. So as a bull that really did well here, I want to continue. doing it, right? I want to buy it. So under my rules engagement, I have two prices in which I can consider buying it, 84 or 82, basically 83. Let's call it 83. Say 82, 81. So let's say 83 or 84. Those are my prices in which I can consider buying. Okay? That's it. How's my Shiba doing? I don't know. I think it's down a bit, right? But I haven't looked. But I believe it's down. Okay. Yeah, Quack, that's not my game, bro. That's just not what I do. Okay. If you need someone to provide you trading advice, don't listen to some idiot on YouTube. That would make you an idiot. Now, I don't think you're an idiot. But if you did that, then you're an idiot. So what you should do is seek the advice of a licensed and registered professional. And if you find those professionals don't want to give you advice because you don't have enough money, let's say, then you should learn how to trade for yourself. But certainly don't listen to a 15-year-old that's, flaunting his Lamborghini. Okay. Okay. So those are the two prices in which I would consider if I were me. If I was bullish and if I were me. Well, I am me and I am bullish, so I am thinking about it. So the next thing is I need to use, so that's all strategic. I want to buy it at maybe 83 or maybe 84, 82, forget about it, not interested. Okay. So now I got to zoom in a little bit, but I want you to understand where I'm coming from. I did really well here and I want to continue that. What are my choices? Currently 84 or 83. So this 200 and almost 300 now pip drop is understandable, but it doesn't impact my strategy. Okay, great. Cool. And hopefully these bears understand that I'm likely to start coming in, and maybe they're worried about that because it's on this time frame, this is definitely up. And of course, based on seasonality, I would say this should definitely go up. Okay. So drive into a little smaller time frame. Does this look bullish to me? No. I tried on this one here. Actually, what I did is I saw this giant leap and I caught the pullback and I longed it here with this idea. Oh, failed. But I dropped my lot size by 66%. So I'm still in risk management mode. I'm not like guessing. I'm not throwing down bets. Oh, I'll bet you it reverses now. Ha 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 ha. No. I'm entering in what on the short term is a very, very bearish market, and I'd be a fool to jump in going big because I think I'm smarter than market. I know 82% of the time this will go up. No. That's dumb. And once again, you're betting, you're gambling, and that's intolerable. So instead, I'm using technical analysis to say what would the decent prices be. In particular, though, what pattern would look good. So I would think something like this happens next week. And by the end of next week, I'm longing this again. Milo says November is the worst month of the year for yen. Well, you have to define what worse means. So you mean yen generally weakens or even typically weakens? Remember, there's no good and there's no bad, so I don't know what that means. Does the yen lose value? which means Aussie yen up, or does it gain value, which means Aussie yen down? Because you might say the yen, but you mean yen pairs, and you're like, oh my God, all the yen pairs come down. Well, that would be good for, yen is the weakest in November. Okay, great. Thank you. We've had, we've had a couple of boot campers, actually several boot campers recently do their own analysis on top of my advice. So I give it, not my advice, but my experience. I'm sharing my experience. I'm sharing my thought process of fundamentals and seasonality. And of course, entrepreneurs, in particular, entrepreneurial FX boot campers, they look at this and they say, oh, I want to test that. And they come back and they're like, yeah, it's true. It's generally true. Okay, which makes me feel good because they're analyzing from different points of views with different techniques, but they're coming back and reinforcing what I'm teaching, which is, desirable, right? Desirable. So yeah, but I'm going mostly from experience. So with all of this, let's just declare this as my buy zone. Doesn't mean I will buy it, but I can buy it. So the ways this could happen is it could drop down today and then stabilize, or it could stabilize, drop down next week, and then pop back up. But I'm looking for a change in trend. So, for example, you could do stuff like this. Let's insert price action pivot points. It's only now looking at the candles and measuring things like standard deviation. And we're on an hourly chart. So let's just say, as we go through the day, this price action pivot point indicator will update the slope of the mean every hour. Wow. Gotta really zoom in here on that one. So let's just remove maybe all these pivots, for example. Bias pivots, we can kill that. New pivots. Okay, we'll just kill all that. Because we already know what we're interested in and not interested in. Okay, so we could look at this, and what this is telling us is over the last 24 hours, this is actually turning north. Now, we're also looking at a 4-hour chart, and we're trying to say, when do I start getting interested in buying? Well, now that's 24 4-hour candles. So it's saying in the short run here, it's still quite bearish. And we are riding the 4-hour 21 down. This is hardcore bearish. Bears are going to sell this. Do you understand that? There are bears in this market, and they will sell it. That is a beautiful chart setup. It's gorgeous. But a bull might be like thinking about it like, well, what if they don't sell it? What if it stabilizes here? What if that monthly pivot point does hold or whatever, right? Because maybe a bull is doing a fib on this. Okay, is it a 382? Is it going to drop to the 50%? But at some point, what they could do as a bull is say, well, they're watching this period here. And they're like, that looks like it's forming a double bottom on the price in which you expected it to do it anyways. When we were up here, you may have expected that at this price, it stabilizes. That's the important part. Not that it might be doing it. That's irrelevant. But that way back here, you might have said, well, at this price, it might reverse. So isn't that the interesting part? If you then start to see reversal patterns, you're like, dude, I get that. I understand that. In my book, I talk about your mind's eye. You need to see it here so that if or when it happens, you recognize it. You've already seen it with your mind's eye. So now you're here live and you're like, well, that's kind of what I thought would happen. And that might allow you to buy it here or buy it here. Okay. But I'm telling you, a bear is going to want to sell that. That's just gorgeous. Look at that. Could turn into a cup and handle. I don't know anything about a cup and handle. When I hear patterns like that, I just think of, weekend seminars at a Holiday Inn conference room that some guru is selling you. I'm like, dude, a cup and handle. Right. And then and I've always felt this way for 15, 20 years, right? So the next thing I typically say is, what about the 3 pregnant nun pattern, right? Yeah, just like, whatever, dude. Whatever. Okay, fine, right? Yeah. So that's it, So I know I look beautiful, but inside I'm a grumpy old man, right? So I'm like, yeah, bah humbug, you don't need that. Yeah. Right? How do you know when to sell the pound? Right? How do you know when you have to sell the pound? Yeah. Your garbage is gone and the dog's pregnant. That's it. Sell the pound. All right. Kitty cat, same thing basically, right? So some of these are better than others. So I'm looking at this, and by the way, as far back as here, because this period up here, sort of third week of October is when I exited all my trades. Okay, so back up there, one of the things we talked about is, oh my God, the buy zone is hundreds of pips below us, right? So what we were talking about way back then is this is the buy zone. So when you exit your bullish trades up here and then you're like, oh my God, we're at 93 and this has to drop 300 pips before I can buy it? Like, seriously? That sounds terrible. But ultimately, that is the buy zone. So here we are now. Here we are. This is an okay price. This is a better price. The thing is, we're in that toleration. Like, this is tolerable. Okay. Do you ever trade for a prop firm like these other places? No, I think they're scams. Okay. Okay. So anyways, I look at that and it's within toleration. Do I buy it today? No, I don't think so. No. But we're in a zone, right? We had to choose basically 91 or 90 or something like that. It's actually 90, 73 and 89, 62, right? So whatever, 90, 75 or 89, 62. Somewhere in between that, I'd like to buy. So what I'm actually doing, ladies and germs, is I'm expecting somewhere in here some sort of reversal pattern. So I will be watching the technical analysis or conducting technical analysis. And if I spot a reversal pattern, I'll probably take a shot. That's all. Cool. All right. So I said ladies and germs, and it reminded me of something. So I'm glad I said it. I've mentioned recently that I think it was 2 million women lost jobs because of COVID-19. Okay? Of which 200,000 got new jobs. So, right? So 90% of women have not got their jobs back. And I'm like, holy crapola, that's bad. So one of the questions in the back of my mind is like, what's going on? Are women still at home taking care of kids? But didn't kids go back to school, or did they pull their kids out last year and started homeschooling and now they're full-time unpaid school teachers? Right? Like, is that what's going on? Like, I don't know what's going on. Okay. But it's disconcerting. That's not a sign of a healthy economy. And by the way, we have jolts today, don't we? But guess what? A report came out today that analyzed 50 business schools about their MBA programs. More women have started their MBAs this year than ever in the history of the United States. And 30% more women now are in the MBA programs than 10 years ago. 30% more women, 30% increase of women are getting their MBA than just 10 years ago. And I'm like, holy smokes. Now, that's not millions of women, but that somewhat answers the question partially, right? Where some women said, okay, I got laid off, so I'm going to go to B school. And that's a good move now, because 10 years from now, I don't know about the other schools, but women that go to Harvard Business School and get an MBA, they are going to be on the track for senior leadership in their corporations. Harvard doesn't teach you to be the night manager at Taco Bell. They expect you to be the CEO of the Fortune 500 company. And more CEOs of Fortune 500 companies have the MBAs from Harvard Business School than any other school. In fact, maybe all other schools combined. You want to be a Fortune 500 CEO, you go to Harvard Business School and get an MBA. So if Harvard has more women than ever, then 10 years from now, 15 years from now, these women will be in senior leadership roles. They will be senior executives. They will be on boards of directors, and they will fix some of the stuff that's broken in our corporate society and society at large. Like this BS where you're like, a male employee makes 30% more than a female employee. Why? That's so stupid. So she's going to fix that. She's going to tear that down. And it'll turn out like there won't be job negotiations anymore. Hey, you want to work at JP Morgan? You want to be an analyst? You're going to earn $168,322.56, regardless if you pee standing up or sitting down. It doesn't matter. Okay? Doesn't matter. That's the role. And if you're excellent at your role, you'll get a promotion. That's it. So that's cool. So like, oh, I'm super excited about that. Okay? I'm super excited about that. That is very hopeful. Yeah. Yeah, that is good. But still, millions of women are not working that used to work. So, okay. So we can go through this very quickly. Same thing with CAD. That's a buy zone, but it's not buyable. That's a buy zone, but it's not buyable. So we're close. And let me fix the pig dog. Let's put it on the same template. We'll go out here, and what's going on? It's on the M2. It can't fall further. Okay? It can't fall further. It has to go up here. Okay? So, interesting. Great. We'll do, lots of people want to do gold. Let's do gold. Gold just rising, tickety-boo, just like we have it set. Okay. When we were here yesterday, the buy zone was here. Your stop would be below the support pivot or below that low. okay, which is almost one and the same. And your target would be up here, 1874. You'd be buying at 1850. There's about 25 bucks in this. Notice the compression, and the compression is created from the double top, and the double top compresses because it fails to make a higher high. So it's also a warning sign that you're near the top. Now, all right, the warning sign. Whoa, should you be as aggressive? No. Well, why is that? Well, the reason we're on day trading only, I said, is if you only traded this based on day trading, you wouldn't see the risk. Obviously the rest of the market sees the risk. I want you to look at that and say, this was beautiful, 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 this was beautiful. But why not the higher high? There's something on this chart that doesn't explain why we didn't get a higher high. What's the problem? Why are we not getting new buyers? And that's where I invite you to add more information. And what it shows you, right? Let me change this again so it's more clear. Let's change this to weekly. Okay. What this tells you is this is the expected top for the week. Traders expect that. They expected it here. They expected it here. They expected it here. All these trades, the day trades and everything, right? It was expected that this would be the out, and it happened. So what does this mean? It means institutional investors know these prices and respect them. So day trading's great, but you can't throw away your swing trading because your swing trading says out. And if you got out way back here on Wednesday, did it really matter you missed Thursday? Now it's Friday. Did it actually matter? Okay. So if you're going to try to buy into this, this is the buy zone. Okay. For next week. So if you're buying this now, today, you're doing a front run. And I would not go to 1875. That's silly. This is not a day trade. The day trade is looking at this and saying, oh, you should get out in $25 because we didn't make a higher high yesterday. I don't care about yesterday. I care about the last week. So if you believe that's going to continue, this is a buy-in price and the target is 1900. So I'm not going for $25. I'm going for $50. And that's how the Wayne do. Okay, so JOLTS is coming out. What do we know? It's going to be 10 million jobs and not nearly that many people looking for jobs. And this is part of my analysis. If we had a lot of people out of work and companies were not trying to hire people, we would be in a world of hurt. Like, oh my God, think depression. Millions of people out of work, millions of people willing to work, but there's just no work. How do you get out of a situation like that? In many cases, you don't. The Fed tried everything back then and it only made things worse. The only thing that saved the economy was Europe decided to blow itself up. And that really benefited the United States a lot. Okay? So that's tough. In this situation, we have millions of people out of work, but we have 500% more jobs than people looking for work. Like, dude, this is good. So these are the things we know. I think we're going to have less job openings, Okay, here we have 10,500,000. It's going to come out, I don't know, 10,100,000 or whatever, but there's lots of jobs. Okay. Okay. La la. Oh, I'm sorry. This came out at 10. This is still another hour to go. So I'll leave you the link if you're interested. So I think that's it. So thank you for being part of this community and all the hard work and positive energy that you share. Hope you have a wonderful weekend. Yeah, peace on earth. May the pips be with you. May your profits be above average. I wish you the best.